Hi friends, so let's start the another series of multi-bagger stock. This is the eighth stock, so this is the eighth series now. And the stock which I have chosen for this particular series is Jyoti Resins and Adhesives Limited. Beautiful stock with the beautiful fundamentals, very good financials, and the most important part, the sector it is catering to. It is a ever-growing sector. It is a growing sector, and in that it has a very good penetration, Jyoti Resins, and that is why I think it's already a multi-bagger stock till today. But I feel this stock, with less than 1500 crores of a market cap, this particular stock has all the potential to become a even bigger multi-bagger stock from here on. So with this, we'll start our presentation going forward. So what is a multi-bagger stock? So multi-bagger stock is a stock which gives you returns of more than 100% of the initial investment. So, for example, a stock that quadruples is a four bagger, and so on. So, we'll just pick one quote, and that says that the market gives you a chance to buy a rupee stock in order 25 paisa, but you should have 25 paisa in pocket when that chance arrives. So, I think we discussed this last time also, and it's a very important quote that I've again taken. You know, it's very it's very apt for this kind of market where you're getting bear market, where you're getting stocks at less valuations, at lesser than their intrinsic values, the stock which have growth potential, but they have cooled off because of this correction. So it becomes a very important time to pick up these good stocks, multi-bagger stocks. You have to do a good research, find out the companies which are trading at good valuations and which have a long-term growth trajectory, which have long-term uh, you know management, and let's say their balance sheets to convert this opportunity into a bigger one. So Jyoti Resins advantage is this is catering to a adhesive kind of industry, and this adhesive it's probably used in many of the industries, and this industry in India will ever be growing from here because India is a developing country. We require a lot of homes, we require a lot of infrastructure, we require a lot of other cosmetic good furniture, etc., all those things which will keep on be growing from here again and again. As soon as our per capita income will keep on growing, we will see that these kind of companies will continue the momentum and they'll continue to gain the market share as well as their own financial balance sheets. Peter Lynch says that behind every stock is a company. Find out what it's doing. So that is that has actually been an endeavor for last 1.5 month, from where we started the multi-bagger stock series, that we actually want to pick up those stocks, pick up those businesses, pick up those companies which have good management fundamentals, which have good financial fundamentals. They are catering to a high sector, which is growing sector, and which probably can lead into the markets and probably become a multi-bagger from here on. So we want a company with higher revenue growth. So multi-bagger stocks generally give 20% more kind of a returns in terms of growth. We're looking for that because high growth stocks give you double advantage. They also see EPS growth. At the same time, they also see a high PE growth. So multi-bagger stocks can become fast multi-baggers only when you see a good revenue growth, good profit growth, whether it is top line or bottom line. At the same time, when you're getting the stock at a good valuations, and moreover when you see a P expansion coming ahead, that makes the stock even more attractive to become a multi-bagger stock. So we want the stock to have a large addressable market. This Jyoti Resins is actually a large segment because it is catering to adhesives and resins which are used in probably many of the industries, and that's the reason which has large addressable market. We also want a disruptive potential. It has already done that, and probably it has much more chances to do that in the future as well. In that way, this is a good stock for this particular point as well. We want the stock to have strong fundamentals, so we want them with strong financials, including robust revenue growth, increasing profits, and healthy cash flow. These all things are being met by this company. We'll see in the future slides also. It's beautiful revenue growth they have seen, and the growth has been phenomenal. It is way above the industry standards. That makes it a very attractive stock. Mr. Late Rakesh Jhunjhunwala says that markets are like women, always commanding, mysterious, unpredictable, and volatile. This is what is happening in present bear market also. And we are hearing a lot of talks like Mr. Naren of ICICI Prudential who comes and tells her that to stop your SIPs for a few months or let's say years because uh, we see a lot less growth in the small caps and mid caps going forward. See, these markets will always try to buffle you, shuffle you, try to deviate you from your path. It will give you indication that already good returns have been made, good fortunes have been made. Now it's a time to come out of the markets, go into debt markets. See the overall, if you see the structure of the equity markets, they are made for higher returns. The structure itself of the equity markets is such that, see, debt instruments you'll always get around 6 to 7% in the FD or in bonds. That is the fixed amount that you'll get it. But in equity markets, you expect the companies, good companies, to grow at more than the GDP nominal growth. Now, GDP nominal growth takes into account two factors. It takes into account the inflation and it takes into account the real GDP growth. So, if at all India is growing a real GDP growth of around, let's say around 6.5%, and let's say we have an inflation around 4% above or so, then we expect the growth of good industries to be more than 11 to 12%. We expect that the earnings of these kind of companies should grow by greater than 10 to 12%. So this is the only instrument which takes into account the inflation into account. Because if the inflation is there, the company will also increase its prices. That will increase their profits and that will probably increase their market share and market cap, resulting in the higher stock prices. So this is the only method which takes into account the inflation part into its inbuilt mechanism, and that's the reason why it will give you that kind of stupendous returns, beating inflation for long amount of time. It has already done it for last 30 years, and there is no reason why it will not do it for next 30 years. But they'll be mysterious because there will be a lot of ups and downs. India is a country which is trading around 20-22 times forward P earnings. It is a country which, which has been enjoying the highest level of P multiples, highest level of valuations in the all the good markets. Now Indian market is probably a top 5 market in the world, but still it is enjoying those kind of great P multiples, 22 times forward earnings. China is trading around 12 times, 13 times PE earnings, in spite of all the phenomenal run which China has had for last 2-3 months. China market have grown around 7 to 8%. Hong Kong market has grown around 37, 38%. Still, India is trading at those levels because India is a structural story. What do you mean by structural story? A story which will continue for many, many years, many decades. A lot of economists believe that, and it's not only about India, but in around the world, they all believe that the next 3 decades at least, if not more, belongs to India, and there's a fundamental reason to it because the demographic advantage India has. We still have around 60 crore population, which is less than 20 years, 7 years of age. This is the population which spends a lot of money on leisure. It spends a lot of money on travel, tourism, education, healthcare. They want houses, marriages. So all those kinds of expenses which you need in an economy to grow, this is the people which will actually cater to those growth. So fundamentally and structurally, I'm saying India is poised to grow. There is no reason why India cannot grow. So if India is going around 10 to 11% or 12% of GDP growth, nominal GDP growth, then the companies, good companies, smarter, which are smarter and good management and into a good sector with good fundamentals, they will at least beat the nominal GDP by around 2 to 3%. So we expect the good companies to be growing at around 15%, if not more. So, but there will be times when you will see this kind of bear markets like it is going on. Although it's a very small bear market, the mid caps and small caps have fallen around 20% or so, which is not high. But still, the people who fear from it, people who feel nervous out of it, these have been the trends. We've seen so many bear markets, we've seen so many cycles. Because again, that is the structural part, that's the inbuilt part. The kind of ups and downs which the economy shows, the cyclical downturns, upturns which the economy shows, it is all inbuilt in the system. You have a graph. It's a sinusoidal graph. It'll go up, it'll reach to a neutral value, go down, then again come to equilibrium, again go up, you'll see again a burst, then again coming down. So it's a sinusoidal graph. It will keep on happening. That is how the structure has been made, that is how the economy works, and that is how the stock markets work. We want the management to be highly motivated, ambitious, knowledgeable management with high moral values. This is one such company. P expansion, already we have seen that if you enter into a company at good valuations at a good time, those kind of P expansions give you a good return in the long run. Now, the salient features about this company. Well, first we'll see the quote. What the quote says. So the stock market is never obvious. It is designed to fool most of the people most of the time. That's the beauty of the markets. When you will feel that nothing can go wrong in the market will burst, and you will see a deep corrections. And whenever you will see that nothing is going to happen, the markets will go to doom. You'll see no growth now. The stock prices will keep on going down, and there's nothing left in the stock market. That's the time it will form the bottom and will start going up. So I always say the tops are made with best of the good news, and the bottoms are made with best of the bad news. Presently, we are going through this kind of one kind of a cyclical downturn. We hope that it ends very fast. I don't think the end is too far away. I've been telling this in my daily videos also. So that's one quote. And about Jyoti Resins Limited, it's a manufacturer of synthetic resin adhesive. The company manufactures wide range of wood adhesives, white glue under the brand of name Euro 7000. We all are aware of it. We all have used this into our homes, industry, etc. This was launched in the year 2006 and now is the second largest wood adhesive brand in India in retail segment. So it's become second largest in just 14 years. Market leadership because the company's brand Euro 7000 is the second largest wood adhesive white glue brand in India in the retail segment. The company manufactures synthetic resin adhesives with several features and different substrates. It has anti-timate kind of industry, which is waterproof, fast drying. It has wider coverage, so it gives a fungal resistance, heat resistance. It is weatherproof, so it gives you high fixing strength. The products have cold and hot press applications and multi-purpose uses of wood, PVC, and acrylic. So this is used in all kind of wooden applications where you have those kind of high hot press applications like you see your plywoods, like you see your laminates. All those things are made by hot press thing, and in between those layers of wood, you see those resins coming in. That is a kind of adhesive which is put. You only see the finished product, but ultimately, whatever the products are, they are all made in layers. So if you talk about 12 plywood, it will be comprising of let's say 12 layers, and to join all those layers, you use this kind of adhesive. So we all know the kind of wooden applications which is going to continue in our country and even grow from here as soon as our per capita income will keep on growing, because wood is something which is costly in India. We still don't have this product as a wider variety and let's say in a wider scope. So this will remain costly, and that's the reason why wooden applications will only get in India when you start gaining more and more per capita income. Still, India is less than $3,000 of per capita income as compared to USA, which is around $81,000 of a per capita income. But slowly, we are catching up with those per capita incomes, and you will see a lot of business coming into home decors, into interiors. Let's say in big corporate houses, you will see this kind of applications of wooden products even more, and that actually accelerates the use of this kind of adhesives. What is the business model? The company imports raw materials from various countries, they process them and manufacture white glue at their Santej plant. The finished product is packaged in sizes ranging from 500 grams to 70 kg and sold to distributors, consignees, and sales agents in the retail market. It operates on an asset light model with manpower cost limited 15-16% of revenues, selling and distribution expenses maintained under 12%, and an asset turnover of 8 times. So imagine the sales to turnover ratio is more than 8%. That is absolutely fantastic again. And even the revenues, it's even if you see the expenses of manpower cost is around 15-16%, which is fairly less, I would say. And that's why they have high profit margins. We saw that. We'll be seeing them in the future slides also, but it's around 30% or so. Distribution network is again big for this company. It has to, because you want to cater to pan India. So the company services 14 states in India, including Gujarat, Madhya Pradesh, Rajasthan, Maharashtra, Karnataka, and others. It operates through 38 branches and 60 distributors, catering to 12,000 active retailers and 3.5 lakh carpenters across India. It also employs 400 sales and business development executives. The most important, or let's say the major part of distribution comes from the uh, distribution networks that you have, and it is catering to the most of the carpenters which actually use this product for their adhesives and for making their furniture, etc. All those things. So geographical split, if you see, this we're talking about Q1 FY25. Gujarat has 35%, Maharashtra has 20%, Karnataka has 15%, others are 30%. So fairly good mix of revenue from the pan India basis. In terms of volume driven growth, so company saw 28% YOY sales volume growth in FY23, and with flat growth in FY24, resulting in 43% revenue increase in FY23. EBITDA margin rose around 13% in FY22 and 33% in FY24. The PAT margins have increased a lot from 11% to 26%, driven by lower raw material cost and a higher share of premium products. The manufacturing facility, they are located in Santej, Ahmedabad, Gujarat, with a capacity of 24,000 tons per annum. And They have a utilization rate of around 55%. The company has planned a capex of around 30 to 35 crores starting from FY26 and is expected to be executed within 2 years. It has applied for environment clearances to increase its capacity to 60,000 tons. So it's more than double, it's around 2.5 times. It is establishing a warehouse facility to enhance storage capabilities of both raw materials and finished goods to meet the market's needs over the next 3 years. So overall, that makes this company even more interesting. And since that it has a large pie, it's the second largest producer of this particular resin and adhesive. It makes it much more attractive and much more exciting. So now, if you see the competitive advantage of this company, so they work on low cost manufacturing, which is asset light. So the overall manpower cost is less than it's around 15 to 16% of revenues. Selling and distribution expenses are maintained under 12%. Asset turnover is approximately 8 times, and it has amongst the highest EBITDA per ton among all the peers. The working capital efficiency, hence no debt, and probably that is the best part. The network is in 14 states, there's 60 distributors, 42 branches, selling to around 12,000 selling retailers, 400 sales agents. Then they have diversified portfolio, so they are into anti-termite, waterproofing, fast-drying resins. Then they are into wider coverage of fungal resistance, heat resistance. Then they are into weatherproof, high fixing strengths, cold and hot press applications, multi-purpose use of both PVC and acrylic, etc. They also have a carpenter reward model because that is one segment which uses these kind of resins extensively. So we have one of the fastest rewarding carpenter rewarding model in the industry. Reward and loyalty programs are devised state-wise. Company app provided to carpenters for claiming and redeeming points. Slab systems created on usage basis. We have touched around 3.5 lakh carpenters through various gatherings and programs, of which 1.7 lakh carpenters are registered in our loyalty program. So I think huge reach. 2.5 lakh carpenters in the country. That is a huge, I think, a vendor base or a database or a distribution base which they have made. They are diversified. They have low cost. They're debt on zero. Those all things make them a competitive advantage, and that's make them the best of the company amongst all the peers. Now, what they want to achieve going way forward. So, return ratios which are debt free, improve working capital efficiency. So they continue to maintain 30 to 40% ROE and 40% ROC. Stay debt free and generate positive operating cash flows and free cash flows. Keep liabilities of for expenses below 30 to 35% of revenue. That's fantastic. If you're keeping your revenues of around 30 to 35% expenses, which means you are actually going for higher margins. And we have seen that they are maintaining an average margin of around 30%, 35% plus. 30 to 40% ROE and 40% ROC is way above any standards. I think any company which is even delivering more than 20% ROC and ROE, we all count them in a good category. But this company is giving double of it, so that makes them even more good in the peers and the segment. They are targeting around 20 to 25% volume CAGR over the next 3 to 5 years, and FY25 expected to deliver between 15 to 20% volume growth. So I think if a company is doing a business which is only 30 to 35% of expenses in terms of revenue and 35% margin, and over on top of that if you're giving 15 to 20% volume growth, I think nothing else you can ask for this kind of company. Expand distribution network and our branches. We are looking to expand, increase our penetration in existing states with increasing branches and distributors with an eye on improving our market share. And of course they want to enhance production capacity further, so they are doing another they have, as of now, they have around 2,000 tons per month kind of capacity, which gives them around 24,000 tons per year kind of a capacity. I think they want to touch it to 60,000 tons per annum. I think that's a good capacity expansion because you have to cater to the volume growth. So that's expansion will be needed. They're sitting on reserves, so I don't think they'll be requiring too much of debt anyways for doing that. To acquire national leadership position in wood adhesive field in retail segment, that's their vision and mission. To be India's most preferable adhesive brand for the carpenters, where our end users can find the best solution for gluing for gluing the furniture. We believe to continuously create new opportunities for our team members to do growth in our strategic business. So I think that's pretty much the good part of the company. And company has launched its Euro brand 2006 and become the largest, now second largest thing. That's perfectly fine. The journey has been they started in 1994, established in 1994 by chairman and first generation entrepreneur Mr. Jagdish Patel. Then in year 94-95 IPO in the year which they brought manufacturing setup at Santej, Ahmedabad, over an area of 8,000 square yards. Then in 2005, Mr. Utkarsh Patel, ED, joins the business after completing chemical engineering, master courses in marketing, international business management. In 2006, Euro 7000 brand launched with white glue, cream adhesive for retail. In 2007, they expanded the capacity to 250 tons per month and enters new markets outside Gujarat. Then company forays into Rajasthan markets in 2010. In 2012, they foray into Maharashtra and other markets. 2016-17, they again expand the capacity to 500 tons per month, kind of a thing. In 2018-19, the presence grows to 12 states and capacity to 1,000 metric tons per annum. Then 2022, it goes to 2,000 tons per annum per month. And 2023-24, they forayed into New Delhi, UP with 5 new branches. That has been the journey of this company. The network now is in 14 states with 400 salespeople, 42 branches, 12,000 active retailers, 60 distributors, and around 3.5 lakh carpenters. Now, what is their strength actually? They have high quality machines, which is in 14 states. They have best customer service, which is 42 branches. Quick delivery because of 60 distributors across the India. Strong technical support with 400 salespeople. Strong warehousing facilities because they have 12,000 active retailers. And high strength raw material, which is catering to around 3.5 lakh carpenters. So that's their strength. They want to have a target of 42% non-equity and 50 to 55% return on capital employed. They maintain good ROC and good ROE numbers. We'll see in the future slides as well. Uh, though this has been their track record, they are debt free, continues to be net debt free till since FY18, and yeah. So dividend also they have been doing good. 90% dividend per share, final dividend, and 60% dividend payout for FY24. So that's again the good. I think overall, if you talk about the price per share dividend rollout, it's around 0.8% dividend yield. The management team includes Chairman Jagdish N. Patel is the first time entrepreneur, first generation entrepreneur, and they started the company in 1994. We already seen the previous slide. And Mr. Utkarsh J. Patel, which is the MD, he joined the business. He's done his chemical engineering and business management in marketing and international business. So that's again his qualification. These are two people who are leading the management team. If you see that the portfolio, diversified portfolio, which you're talking about also, so they have anti-termite applications. They have a brand for that. They have a brand for waterproofing, anti-termite, heat, and fungal resistant adhesive. They have a material for cold press applications. They have a material for waterproof, anti-termite, fast drying. If you want fast drying within 2 to 3 hours, they have a product for that as well. Then waterproofing, anti-termite, heat, and fungal resistance. For PVC acrylic sheet bonding to wood and pre-edging tapes, they have another product. Fast drying, another product, and so on and so on and so forth. So they have a wide range of diversified portfolio. And they're doing for so they're mostly catering to the interiors and probably you have your corporate offices, your family offices, you have your retail segment, you have your home decors, home interiors. That is a segment which they will be catering for, and this is the industry which is going to continuously grow from strength to strength, higher to higher. A number says that China has probably mobilized 60 to 70% people in the urban states. In India, that number is still 22%. So the total urban population vis-a-vis our total population is only 22%. And if we have to come somewhere near China in the near future, then probably our numbers are also going to be near that, which means that we have to migrate around 50% population from the rural areas to the urban areas. Now they all will require homes, they all will require then probably it allows the industries to grow in terms of retail, in terms of interiors, in terms of decoring business. All those things will keep on rising. And moreover, we have seen a trend in India now. A lot of people are spending a lot of money on interiors. People are renovating. So it's not that you only want the new families to come into your urban areas and then the demand will come in. We are now seeing a lot of demand of these products are anyways there in the villages also. People are anyway continuously renovating their houses again and again. They are not that they are set on one kind of a decoration. So and wooden plays a very soothing part. It plays an important part in the overall interior of the houses. It's still the best and still the most adored, probably the way of decorating your house. Still, that will always remain an advantage to this company. The Indian wood market is estimated around $16.7 billion dollars in 2025 and expected to reach around $24 billion by 30. So in next 5 years, it will approximately increase by around 60% from here on in just 5 years. The wood market in India is vital to the country's economy, which is underpinned by the country's rapid urbanization and economic growth. It consists of a broad range of activities from logging to swallowing and production of finished products, wood products like furniture and wood-based panels. The industry is segmented into areas as sawn timber, plywood, veneers, wooden-based panels, MDF, particle board, etc. Sawn timber is widely used in construction, packaging, and furniture making, while plywood and veneers are essentially for home and office interiors. They are all catering to this company is catering to all these kind of applications. The growing number of middle class and rising income levels are driving increased demand for both traditional and modern wooden furniture. In addition, wooden-based panels are gaining popularity due to their versatility and cost effectiveness in modular furniture and construction. We all know that the per capita income is of India is continuously rising. It will keep on rising. We have a lot of room to catch up for that. And our taste, which is mostly wooden driven kind of home decors, will eventually lead this industry to grow further and further. Overall, the Indian wooden industry is poised for continued growth, supported by the expanding real estate sector and evolving customer preferences. Now, rapid urbanization and ongoing economic growth is India's. This is the wood market, which is leading to the wood market boom. The wood market in India encompasses activities from logging to soiling to the production of finished products like furniture and wood-based things. One of the primary drivers of growth is the booming real estate. We've already seen the expanding middle class. We've already seen, and overall, the wood market from here on is going to poised and grow larger and larger. Now, in terms of fundamentals, if we talk about this company, so market cap of this company is around 58 crores. The P multiple is 25, but the book value is still price to book value is what 7.84, which is slightly higher. So we should again buy this stock in corrections. It's not that you rapidly start accumulating the stock. ROC is 65%, which is huge. ROE is again very huge of 50% around. The book value is 160 rupees, and the sales growth has been mind blowing 36%. EPS of 60 on 12-month trailing basis. Promoter holding is decent of around 50%. They are in cash, they have no debt, and dividend yield is also there around 0.72%. So overall, I think a fantastic company, second largest manufacturers of adhesives. They're catering to a diversified portfolio. They have a good network of branches. They have good salespeople support. They're actually on a bottoms up approach where they're directly contacting with the contact carpenters to increase their volumes and growth. They they want to grow at 15-20% CAGR volume over the next 3 to 4 years. Want to keep the ROE around above 40% and ROC above 30%. This is the industry which has always remain ever growing. This is the best thing which all Indians want in their homes. So a segment which will never dry down. Considering all these things, considering the fundamentals, considering the management, considering the track record, if you're looking for one company to have a stock in this portfolio, this is one stock which you can look for. It is a great company which has proven a track record for last 10 to 15 years. So I would certainly recommend if somebody wants to get into this kind of stock in real estate business, and if he thinks that this is one business which India can see for next 20-30 years, then this is one stock which you can look for. And rest of the things, anyways, I've told you in detail. So now we'll just look on the broad parameters of how Jyoti Resins adhesives look like. We'll just go to financial parameters. So this already we have looked about how the market cap and other things are there. Now we'll just scroll down and see the other financial parameters of Jyoti Resins. So if you see the chart, probably this stock has reached all-time high of around 1600, is now slightly retraced back to 1250 levels. And if you see the maximum chart of this company, it has been a penny stock and it has probably reached to around levels of 1600 to 1800, and now it's back around 1200 levels. But it has been a phenomenal run for this company, and that is what the stock prices also show. But this is such kind of industry and such kind of a stock that it can become a multi-bagger from here on also, because the market cap of this stock is still very low and it is catering to industry which is ever expanding, and they are the second largest producers of synthetic resins, and they can actually cater to the industry needs and whatever is the growth we are expecting in this particular sector. So they're entering into the pie of the market share, or they're penetrating in the market share of this particular segment, on the segment itself is growing in terms of the validity of the sector. So these two things provided, it makes a good stock for a multi-bagger returns. Now, the pros and cons. So, company is almost debt free. That is one good thing about the company. Company has delivered a good profit growth of 98.1 CAGR over the last 5 years. Phenomenal growth. This company has really shown a phenomenal growth of 98.1 CAGR. It's great. The company has a good return on equity of last 3 years, around 48.2%. And the company median sales growth is also 31.1%, let's say 32%. So it's probably one of the best parameters, financial parameters you can see about a stock. And probably it's not that this stock has grown multi-bagger till now and cannot grow. This has all the ingredients to even grow from these levels. Such a high quality stock this is, and that is why it is trading at 7.84 times the book value, which becomes as a negative point. So accumulate this stock whenever you have corrections. Whenever you, for example, this kind of correction, it has already corrected from around 1700 levels to 1800 levels to around 200 levels, 1200 levels. So it is giving you a good entry point, and start accumulating this stock slowly, because it's still a costly stock. But since the financials of this company is so good, and the overall scope and the future growth of the company is looking so good, that's why it's trading at such a high valuations. If we talk about the peer comparison, so Jyoti Resins is still trading at around a P multiple of 20, which is the lowest among all the peer companies. So if you talk about Pidilite Industries, SRF, Linde India, Gujarat Fluoro, uh, Godrej Industrials, Deepak Nitrite, Castrol India. So this trades at a very low P multiple, still of 20.51. And if you see the PAG ratio, which is the P ratio, and compared to the growth ratio, that is phenomenal. It is less than one, which makes the stock still undervalued and still value for money, I would say. So it's a good overall nature of the stock. Even there's a dividend yield out of it, so 0.72% dividend yield of the stock also makes it still more attractive. And in terms of peer comparison, this stock looks fairly good, and it is still a current market cap of around just 1500 crores. So it's still a small cap kind of a company, and the way it is poised in its sector, it can still grow higher and higher from here. If you talk about the quarterly profit, so it has been a steadily increasing trend. If you see from December 21, it was having only 7 crores of profit, operating profit. Now it has gone to 22 crores from December 24. And if you see the operating margins, it has been very healthy and ever increasing. So 14% operating margin in December 21 quarter, but now it is around 30 plus percentage. So the operating margin has been phenomenal. So whatever growth you are getting in the industry, you're not getting it by compromising that efficiency or compromising those profit margins. You are increasing your profit margin, and still you are increasing your pie in the industry. That makes it much more fascinating and much more adorable in terms of the stock prices. So net profit, if you see, it was 5 crores in December 21 quarter, and now it is around 16 to 19 crores in September and December quarter 24. So it's probably almost three and a half times in last 3 years. So that's a good growth, we can say. No interest income because it's debt free, so they don't pay any interest. So that is again good thing. No depreciation because they don't own those kind of capital assets and all those things. That's why they don't have any debt for that matter. So that's again a good thing for us. EPS has also been rising, so around 4.08 EPS in December 21. It has now already increased to 15.88 in December 24 quarter. So last 3 years, we have seen a jump of around 4%, 400%, let's say 4 times in the EPS growth of the company. Again, profit and loss, if we talk from last 10 years, so March 2013, it was just 1 crore of operating profit, which has now increased to 87 crore. So 87 times the profit increase in last 10 years. So I think that's again good. And if you see the net profit also, it was probably less than 1, and now it is around 73 crores in this quarter. If we talk about, let's say, December 24 quarter, so again it's a good thing. And they've been doing a dividend payout also, because they're not doing any investments in terms of capex. That is why whatever free money they're getting, they're slightly investing in their business growth. Rest of the money they're giving as a payout to the investors as well. So that's again a good thing. The EPS has increased from 0.39 in 2013 to 60.73 in December 24 quarter. If we talk about the compounded sales growth, so last 10 years have been 33%, 5 years 30%, 3 years 36%, trailing 12-month basis 10%. The compounded profit growth has been 76% in last 10 years. Last 5 years it is 98%, last 3 years it is 82%, and trailing 12-month basis it is 13%. The stock price CAGR has also been good. Last year we should ignore the last year because anyways we are into a bear market rise now, so we not be taking too much out of it, but take the advantage of this bear market corrections in accumulating this stock. The return on equity has been absolutely phenomenal. Last 10 years, 44%, 5 years, 46%, 3 years, 48%, and last year it has been around 49% on trailing 12-month basis. So, again, no complaints on that. Very phenomenal growth. Borrowings have been zero, so that's not an issue at all. And you see the reserves. It's 179 crores. So a company which is only making a profit around 70 odd crores, they now have a reserve around 180 crores. So they have capital to grow their business or do buybacks or do share buybacks, or let's say issue bonus shares. So whatever it is, they're sitting on big reserve which make them absolutely poised for any future growth in terms of business or giving back the money to the investors in both ways. So excellent balance sheet, phenomenal balance sheet. That has been a good again a good thing of this company. Cash flows, we can say it's pretty ordinary because they don't have too much, they don't have to buy they don't have to borrow anything. That's again a good thing. uh, Cash conversion cycle is not important for this industry because it has to be high because it's mostly on cash. But if you see, the ROC growth has been very good. In March 2013 it was 15%, then it has now increased to 66% in March 24. So the growth of ROEC, return on capital employed, has been again fantastic. So that's again a good thing. FISDIs don't own this stock a lot, but the public is holding around 48% of the stock, and the promoters still above 50%. So that's again a good thing that a big chunk of stocks have been owned by the promoters. FISDIs are holding it, but in a small percentage. So these are some of the things which we talked about, the ratios and how the balance sheets are looking like. I think it is phenomenally good in terms of the financial parameters of this company.